The Inflation Reduction Act, which was signed by Biden in August 2022, seems to be pretty self-explanatory. But will this bill truly reduce inflation? After all, this bill will cost $770 billion and is over 700 pages long. The two major economic factors that his bill is intended to reduce are healthcare and energy costs, and although they will in fact reduce such costs, it won't be nearly as quick as most think, and possibly not as effective either. Of the $770 billion, $369 of it will be going towards reducing greenhouse gas emissions and investing in clean energy. Most of which will be going towards building a bigger green energy infrastructure, which is projected to have 950 million solar panels, 120,000 wind turbines, and 2,300 grid-scale battery plants by 2030. This should reduce greenhouse gas emission by 1 gigaton. To put that into perspective, in 2020, 9.3 gigatons of carbon were released into our atmosphere. As far as direct savings that consumers will immediately be able to take advantage of, solar roofs will be eligible for a 30% tax credit. Also, new cars will be eligible for a $7,500 tax credit as well. Although this is a downgrade from the previous tax credits available, as now the cars must be 100% made and produced in North America. This includes the lithium batteries, which must be mined for in North America. But as far as used cars go, buyers will be eligible for a $4,000 tax credit. The United States currently spends about $4 trillion on healthcare each year. Here's what the Inflation Reduction Act is doing in an attempt to significantly lower that number. Insulin costs will be capped at $35 for a month's supply, helping 3.3 million Medicare beneficiaries with insulin costs. 5 to 7 million Medicare beneficiaries could see their prescription drug costs go down because of the provision allowing Medicare to negotiate prescription drug costs, something that Medicare has been blocked from doing for 19 years. Starting in 2026, Medicare will begin to negotiate the price of 10 drugs. An additional 15 will be added in 2027, and an additional 20 will be added in 2029. The drugs whose prices will be negotiated are unknown, but are expected to be announced in 2023. 50 million Americans with Medicare Part D will have pharmacy costs capped at $4,000 in 2024, and $2,000 in 2025. This is a significant decrease to the $7,000 that Medicare users currently spend out of pocket on their prescriptions before qualifying for catastrophic coverage. The current uninsured rate is at 8% but is projected to slightly drop when the Inflation Reduction Act will allow more people to gain access to more affordable healthcare. The White House predicts that an additional 3 million Americans will have health insurance. The last problem that the Inflation Reduction Act aims to solve is issues related to taxes. It's well known that corporations have found loopholes that allow them to avoid certain taxes. Last year, over 170 S&P 500 companies paid less than 15% in taxes. Now companies that make more than $1 billion will have to pay a minimum corporate tax of 15% and pay a 1% fee on stock buybacks. This 1% fee on stock buybacks is way too insignificant to deter companies from buying back stock, and also won't raise much revenue for the United States. Although, the new 15% tax law is supposedly going to collect some $124 billion in taxes owed by wealthy people and large corporations over the course of 10 years, according to the Congressional Budget Office. In addition to more taxes being collected, there will also be more IRS agents. $80 billion will be going towards the IRS over the next 10 years, and the current amount of IRS agents will be doubled. Although taxes are being raised for corporations, the White House claims that no family making less than $400,000 a year will see their taxes go up. This accounts for 98% of the United States population. So will the Inflation Reduction Act have an impact on inflation as the title suggests? Studies show that it actually will have a negligible impact on inflation, if any at all. In fact, due to the high cost of this bill, it could even increase inflation in the near term. One expert claims that the bill will increase the GDP by just 0.2 to 0.3% over the course of the next 10 years. Although Inflation Reduction Bill will have practically nothing to do with inflation, and seems to be purposely misleading Americans, that doesn't mean that it is necessarily bad. After all, healthcare costs will decline and so will energy. And although these savings that the American consumer will be given won't happen anytime soon, they will pick up momentum in the future, and help millions of Americans save money indefinitely once these laws go into effect. If you enjoy our content, don't forget to like this video and subscribe to our channel to stay up to date with market news. Thanks for watching and stay informed.